Harvard grad, Goldman Sachs. As we entered in the Bitcoin economy, how did you say, hey, I have this cushy job at Goldman Sachs. Let me go into the startup world and tackle this Bitcoin economy?
If you have a massive stack of Bitcoin right now, you can't just walk into a bank and get a loan. They won't take it. They'll laugh you out of the room. You frankly can't even go to a financial advisor. Maybe you could buy it at your 401k because there's an ETF, but that's not really who the people are that made the money. That's not how they made the money. It's a completely different experience. And so if you're an American, most of the time you bought your Bitcoin in Coinbase. If it's in Coinbase, you basically need a way to get it into the crypto economy. And so Coinbase has done a great job with Base, which is a roll up to Ethereum. And basically you can take your Bitcoin from Coinbase, put it in the crypto financial system, get way faster financial products, legally, compliantly, non-custodially, with all the promises of crypto. Because the problem is you look at a lot of these Bitcoin lenders, and it's one of the reasons I decided to kind of get more vocal about what we've built, is you've got people basically rehypothecating collateral, treating it like their own. I mean, there's a reason we called it Votre. Votre means yours in French. It's your money. It's your assets. They should be treated that way.
Welcome back to the Block Fuel Podcast. I'm your host, Avi Mash. Alongside me is J. Paul Meyer. We are live in New York City, focused on the Bitcoin economy. So today, J. Paul, you were the founder of Votre, A16Z backed in the incubator, if I'm correct. And on paper, you look phenomenal, right? And I've met you, and the paper justifies who you are, right? But Harvard grad, Goldman Sachs. And I do want to touch on that, of course, as we enter in the Bitcoin economy. A lot of institutions, of course, are focused heading into Bitcoin. What does that mean? Everyone's asking what the institutions mean, right? So you studied CS at Harvard, right?
Yeah.
Went to Goldman Sachs. And for the past 6 years, I believe you spent there roughly.
Yep.
What were you doing over at Goldman Sachs? And
Goldman was great. It's basically getting paid to learn how the kind of world and the economy works. It's pretty entertaining. The number one thing everyone says is it's all about the people. You meet incredible people. The internship, basically, you get to kind of see a whole view of the floor, learn about how markets work, how market structure works, which, that side can be a little bit more boring and detailed. But what's really exciting is, you've got green and red and, flashing lights coming at you 24/7 on the trading floor. If you've ever been onto the fifth floor of fixed income, that's completely, chaotic and fun and high energy. So I think I got a lot of my personality recently from being on the trading floor. And so transitioning that into a startup environment has been pretty fun and interesting too. To answer your question on the institutions. So yeah, people have no idea in crypto what institutions they mean.
I want it.
Yeah. I remember when I first heard that, I was like, I don't even think, so I don't want to say people because a lot of people have a decent sense. So if you look at some of the Bitwise guys, some of the other companies in the space, they know very well. So there's this legal term called a registered investment advisor. So if people say RIAs, that's kind of what that means. In reality, there's 20 different kinds of RIAs. There's multiple different kinds of broker dealers. You've got this whole channel called the independent channel, where you've got basically advisors similar to a dentist or a doctor, where they've got their own small business of people in that local town in a kind of a micro ecosystem that they cover and that they look after. They've got the relationship and they cover the client. Now, a lot of those types of folks will have a platform I don't want to name too many names just for brand reasons, but basically you've got firms that sort of sponsor and host the RIA's kind of license. So you sit with your license at that firm and basically manage money using all their infrastructure. It's a massive ecosystem. People kind of have no clue. If you're in it, you know about it really well. But yeah, it's a fascinating space, and that's what the institutions are. They kind of break down into asset managers, wealth managers, advisors, hedge funds, and then corporations as well, which I know recently at the conference, so I saw a lot about the CFOs of kind of Bitcoin in that whole area.
Yes, we are officially a Bitcoin treasury company ourselves now.
There we go.
So we put some money into Bitcoin, and we said we had to dog food our own push here for the Bitcoin economy. So yeah, just talking a little bit more about Votre, right? So you're at Goldman Sachs, you're dealing with some well-known high net worth people. So we won't share their names, of course, but people that people would recognize for sure. Managing their money, creating different tools and different instruments for different investments. What was your Bitcoin moment? Like,
Yeah.
how did you say, hey, I have this cushy job over at Goldman Sachs. Let me go into the startup world and tackle this Bitcoin economy?
Yeah, I had done a couple. I worked on some big projects internally through the firm's accelerator called GS Accelerate, and so I got a lot out of that. I mean, look, I got to manage a team. I got to basically raise money internally, and everybody was phenomenal. It's very hard to build a net new kind of financial product, and so I had done that for a couple years, got a lot out of it. Networked a lot within the firm, and eventually, I really kind of decided I would go home at night and basically be like in DeFi, like testing these things myself because I had studied CS, and when I saw what was possible, where you can basically just move money at the speed of light in 2 seconds, and I would go back to work, and I get why the system is the way it is, but as a founder, as I built the company, you start to realize, certain design decisions are a function of regulation and important things that matter, like trust and security and the human touch. But when you get to start from scratch, you're able to kind of build a completely new thing and do it kind of your own way. And you get to start, call it 150 years later when technology has massively changed. And so we're able to leverage, some great tools like Persona on the KYC side. And really there's, it's amazing what just 100 years of tech innovation gets you. So I think you were in a position to have a pretty good, margin structure on that and be able to leverage software and blockchains and all the above to really solve the same problem, but in kind of a new, unique way for a new audience as money continues to kind of rotate into a new user base of, call it like 25 to 35, people that have done really well. If you bought Bitcoin at $100, like you're a high net worth individual now. So congratulations, and let's treat you like one.
I do want to come back to that in just a second because there's a lot of folks out there that will love Votre for that reason if they bought early and want to figure out what to do with that. I think this whole premise too of Bitcoin moving basically from what was called digital gold, right, a store of value, to we're seeing this Bitcoin economy kind of take place. And we learned a lot about that in Orlando, that strategy world, but it felt like Sailor World, right? But what was really cool, the energy there and just seeing other folks creating different products and seeing that there's this whole economy being built around Bitcoin when initially we all thought it was going to be like a layer on top of Ethereum, right? Yeah. But Bitcoin, a lot of the TradFi folks are seeing Bitcoin as this amazing collateral. And so that was essentially the basis for Votre. I'd love for you to explain what Votre is. It is pronounced vote, I believe, in French. Votre. So if you are French, there's the correction there. But yeah, J-Paul, would love to hear about it and what inspired you to build this.
Definitely. So we actually started as Collar Protocol because I was sort of taking a product that is done on the street pretty commonly, and then once I kind of learned, when you're a startup, you have to actually have a brand. And so people recognize it and it anchors in people's heads. There's a lot of things you learn trying to build a startup after being in sort of a huge ecosystem for so many years. Because when you're at a place like Goldman, you've got a monster brand that, again, there's a reason we bring it up, right? There's a level of trust and client expectation that comes with. And, I got to be very careful. I don't want to say that I ever speak for Goldman or there's all kinds of regulation on that front. But Votre, what we've built is really a high net worth, unique kind of experience for folks who have done well in crypto. They've made money in Bitcoin or Ethereum, and they want to sort of have a piece and a way into the financial system. If you have a massive stack of Bitcoin right now, you can't just walk into a bank and get a loan. They won't take it. They'll laugh you out of the room. You frankly can't even go to a financial advisor. And you could buy it in your 401k because there's an ETF, but that's not really who the people are that made the money. That's not how they made the money. It's a completely different experience. And so if you're an American, most of the time you bought your Bitcoin in Coinbase. So if it's in Coinbase, you basically need a way to get it into the crypto economy. And so Coinbase has done a great job with Base, which is a roll up to Ethereum. And basically you can take your Bitcoin from Coinbase, put it in the crypto financial system, get way faster financial products, legally, compliantly, non-custodially with all the promises of crypto. Because the problem is you look at a lot of these Bitcoin lenders, and it's one of the reasons I decided to kind of get more vocal about what we've built, is you've got people basically rehypothecating collateral on treating it like their own. I mean, there's a reason we called it Votre. Votre means yours in French. It's your money. It's your assets. They should be treated that way. And what's great is there's actually a lot of regulatory relief that you get by not taking custody, by structuring things in an intelligent way. And so Yeah, the regulations are all there for a reason. And as I kind of was building this in, the 2023 kind of post Gary Gensler type economy, that sort of gets built into your DNA. We started it post Genesis, FTX, kind of all those guys blowing up. And not to name names, but yeah, to name names, there's a certain level of trust and custody ship that you sort of have to have, even if you don't take custody, just because people are trusting you with their wealth and something that works for you.
I wanted to dive on that point because first question people are going to think in their mind is like, okay, is this Celsius 2.0? Is this BlockFi? Is this going to blow up? So one, how are you guys different? And two, what have you learned from their mistakes?
For sure. Basically, when you use Votre, you are trading what's called counterparty risk, which is if I give Avi my Bitcoin and he, takes off with it, that's called counterparty risk. We just use fancy words in finance. So, when Celsius or these guys screw things up, you suffer. Terrible, right? So what we've done is the protocol is completely non-custodial. We could blow up tomorrow. We, Votre Inc., the company, could blow up tomorrow. And I probably shouldn't say that as a brand of a financial company, but we could completely go away. Your money would still be on chain. Your wealth would still be on chain. And basically, you could go to the front end or whatever, and worst case, go directly on chain and release the funds. It's in what's called a smart contract, which basically means it's completely out of our control. The legal word is literally control. So if you have any ability to control the funds, you better get licensed as a bank. You better be a custodian the way BitGo, Anchorage, and folks like that have. So we built it that way because we thought that's what users would want, and we've been validated in the market as we've kind of marketed that and explained to you.
And I know you spent, I think, 2+ years going with some of the top legal firms. I don't know if you want to share their names or if you can, but
probably not.
They're some of the top firms.
The United States a lot in legal and compliance.
Yeah, which coming into the institutional space, you need to, right? Especially being a U.S.-based company.
Yeah.
All the strings have loosened a little bit with the new administration. Now more than ever, you need to be buttoned up, and so you guys have done a great job of that. In terms of conceptually what I'm doing, right? For those listening,
sure.
I bought Bitcoin, let's say, which is true in 2017.
Yeah.
If I sold today, huge tax implications, as you were mentioning, and then I lose my Bitcoin, right? Yeah. And no one wants to do that right now.
Exposed to Bitcoin.
So if I'm pulling out cash, right, you guys have some of the best LTVs, so I definitely want to get into that a piece. But also, if I think Bitcoin is going to continuously go up, I do want to touch on this buy, borrow, die concept, which I was listening to a podcast prior, so I had some background on it. But there's also upside. So if you think Bitcoin's going to continue to go up, which right now no one thinks it's ever going to drop, right?
Yeah.
It will probably. Right. It's going to eventually. So when the time comes, you kind of can leverage Votre in two ways, right? So if you need cash now, and if there's a drop, you guys cover, have some covers there, which you'll talk about.
Yeah. So I'll sort of dive into it. So basically, the way Votre works is, let's say, like you said, let's say you bought Bitcoin. The first thing people will get worried about is, if I wrap the Bitcoin into CBBTC or wrap BTC or whatever to get it in DeFi, is that a taxable event? Now, legally, none of us can give tax advice, so that's extremely important. I'll hesitate to use the analogy that our tax attorney gave us, just in the goal of not giving tax advice. But if you think about it as putting a stock certificate in an envelope, I don't think the IRS would, in a court of law, come after, I don't want to give tax advice, but that's sort of an analogy one can use to think about it. The next piece is basically, if you borrow against something, because you have to pay it back, generally in most countries, that's not taxable. So loans are not taxable. That's just a fact from the tax code. So I can say that. And so we structured this as basically a loan and a derivative. So to be very clear, it's a derivative product. All that means is it literally just means something that derives its value from something else. So a put or a call or anything on a commodity is governed by the CFTC. So we comply with all the relevant CFTC guidance, and we are a de minimis swap dealer. So this is all legalese, but it's super important. And so what that means is we put this collar or insurance kind of type product around it. Insurance is regulated completely differently, but we put that around the Bitcoin in the smart contract. Now, the catch is of this whole product, it's not perfect, right? You're going to pay a lower interest rate. You're not going to get liquidated, no margin calls for a fixed period of time. So if you do a 1-year loan, you're good for a year. You get 90% LTV, no margin calls. Now, the immediate question is, how do you do that? The catch is you are capped on the upside. Now, if it goes up, you can roll the trade, but that's a new trade. It requires new liquidity, all the above. And so, yeah, that's basically how it works. So if the lower the LTV that you do, the more upside you sort of get to keep. So if you do a 70% LTV, you're not a complete degenerate. Try to get, 90% like leverage and go buy more Bitcoin or whatever, which, if you want, power to you, it's your call. But basically, if you want to use leverage in an intelligent way, the way that private equity firms do, the way that real estate entrepreneurs do, they don't, the US government doesn't just go get a margin loan on all their stuff. That's a little bit dicey from a financial perspective. What they do is they borrow on longer terms. So they'll do what's called laddering out the debt. So if I have a 1-year loan and a 2-year loan and a 3-year loan, and I've got, $1 billion at each of those maturities, basically, I don't have to come up with all the money at once. Whereas if I had $3 billion, if Bitcoin's below 70,000, it's a little bit scary, because guess who else has a loan at Bitcoin being below 70,000? Literally everybody else.
Right.
So if everybody else is selling at the same time you need to sell, there's a concept in TradFi called a liquidity crunch, aka nobody is buying like at that time because everybody is scared out of their mind. And I think it's important to explain. Yeah, it's catching a falling knife. It's important to explain this stuff because these are concepts that you see on a trading floor, but if you haven't been on one, you wouldn't know what they are.
Yep. Now we talk about this Bitcoin economy, right? Are you seeing mostly like high net worth individual? I think you mentioned like different mining companies. They need to go out and buy equipment. They're sitting on a lot of Bitcoin, right? Sure. What are you seeing kind of in the marketplace? Who's coming to you guys the most? I know you guys haven't fully launched quite yet.
Yeah.
Depending on when this comes out. But yeah, what are you kind of doing in preparation right now?
Yeah, so if you're a Bitcoin miner right now, you basically are sitting on, as you mine the Bitcoin, you're typically selling it to reinvest in new equipment. So your capital cycle and reinvestment can be a little bit off. So what you'd rather do is borrow in kind of a fiat currency that you think is going to go down over time, and basically use that to fund your businesses. So that's, for the most part, like the people that we talk to, it's a lot of kind of Bitcoin natives, as well as a lot of kind of Ethereum DeFi folks that understand that they're supposed to, use things like Aave or Morpho and borrow against their assets. But that's kind of the key thing, is it's about unlocking liquidity. If you're a family office, the way you think about this is, if you listen to like Raoul Pal or Michael Saylor, any of these guys, like he is tapping the debt markets to basically say, look, I think I can cover my 10%, 90% fixed coupon for forever. And he's got his debt structured in a way that's it's a perpetual preferred stock. And so what that means is he doesn't come up against the maturity wall the way that the US government is right now. And so I think the government will be fine for what it's worth. The dollar's the reserve currency. There's pretty good demand for our debt, but that's kind of the key differences. And these are the ways that you can get intelligent with your financial strategy. And so, yeah, it's mostly miners, high net worth individuals, that type of folks. It's a new category of high net worth, but it's, to some degree, it's a lot of the same. It's, if you made a lot of money at a hedge fund, and you're like a macro trader, and you're looking at macro and saying the world is shifting capital assets, like, this is a big deal. Yep. I'm going to buy some. And if I can borrow Turkish lira against it, and it's inflating to kingdom come. And if you grew up in Argentina, you understand this very well, which is why I think Wences Casares came from Argentina. This is all in the book Digital Gold. But yeah, basically told all the Silicon Valley folks about Bitcoin, and they understood it. And then that's kind of how the word spread. Yeah. So Bitcoin's about, in my view, the social consensus of money that matters a lot. Like, we all think a dollar is worth a dollar because everybody else thinks it's worth something. And the military. Yeah. So yeah, that's sort of how I think about it.
No, of course. No, it's fascinating. And I do want to double tap. I touched on it a little bit, but this buy, borrow, die concept, right? Because I think that's super interesting. The other piece is, you don't need to, it's not like the bank's looking at your credit score, right? You have the Bitcoin. Yeah. So if you want to go out and buy a house right now, and you have a bunch of Bitcoin, am I wrong to think it's way smarter to go through Votre and take the money out versus going to get a loan from the bank?
Totally. I mean, why do you think, sometimes you build products and startups even just for yourself. Like, if I want to buy a condo and I'm 60% of Bitcoin, the bank takes fiat dollars and recognizes income. So if you want to finance it, they need to see income and a down payment. Where are you going to get the down payment? You're sitting on Bitcoin. You may have a job in fiat with payroll from wherever, but you're stuck because you'd have to sell your Bitcoin. It's a taxable event, and it's super frustrating. So if you can borrow against the Bitcoin, get dollars out and say, okay, I've got a year to sort of figure out, where I'm going to, if Bitcoin tanks, I'm going to have to post margin and extend the trade. But this lets you get money out of Bitcoin into the seller of the house for the down payment and greasing the wheels and solving real problems for people. That's what great fintech is about. That's what great financial solutions are about. And that's kind of what we learned building products for people.
If you're sitting on one Bitcoin, can I use Votre, or is it
Totally?
It's the
Yeah. So one of the key things is the way our regulatory side is set up is you have to have at least a $5 million net worth to be able to access it. Now that can be illiquid, that can be a couple different things. So that the definition is being an eligible contract participant. That's companies that are hedging for commercial purposes. So if you're a miner, that you count under that exemption. And so that's sort of one of the this all derived from the agricultural world where people wanted to come up with derivatives because they didn't know what the corn was going to be worth in 2 years. It's sometimes it's really just that simple. And I think a lot of people overcomplicate it.
A16Z, very well known. You're a part of their accelerator program. Can you touch on that a little bit, or like what you can share?
Yeah,
what you learned.
I always got to be careful. I don't want to speak for them. They're, they basically built their whole business on brand, and there's some great stories that you can listen to Ben Horowitz tell on other podcasts about. But they wanted to build kind of like the record studio or the unique kind of experience for founders, and so they care about being on time. They find you if you're late. It's really interesting, but yeah, the culture there is really phenomenal. I think, I got a lot out of talking to the team there and everybody, and just some other great entrepreneurs and founders in that batch. And that was we got a lot out of it. It was very educational. A lot of really great regulatory and tech help. I don't think we could have done it without them with the whole process that we've gone through. So it's been great.
So last question, J. Paul. We see a lot of the macro. I won't touch on, tariffs because everyone's been talking about that. Their head explodes. But I do want to just talk about this concept that America just feels so over leveraged, and the world does, frankly, right? So we're living in these times where the Fed's printing money. Everyone, J. Paul's hitting that burr button. Why did you create Votre? Why is it needed more than ever right now? And just thinking about like this world that we're living in, how does a company like Votre come in and help out?
Yeah, totally. So I like to think about what we do is basically giving more people access to what I call kind of the spread trade of the century. You've got the world shifting capital assets from, real estate and other things to Bitcoin. So we're fixing the money. That's kind of what that narrative means and where it comes from. Well, at the same time, if you're like the real estate guys didn't all just magically get rich because they're so smart. Like they bought assets and they were short liabilities. Like they had dollar liabilities. And this is all kind of finance speak. So I'll try to like make it super clear. If there's only 21 million of something and then there's infinite of something else, you probably want to own this thing that there's only 21 million of and owe the thing that's kind of super getting printed like crazy. Yeah. So if you're in Argentina and you own gold or some dollars, even dollars compared to pesos, like are that much better. But preferably you'd own the most scarce kind of best thing, which for a long time has been the S&P 500. I think that's still a great thing for a lot of people. You don't have to put your whole portfolio in Bitcoin if you don't get it. But if you do and you understand it and you can hold it through kind of really hard cycles and you have the ability to take that risk, there's a really great opportunity to kind of do that spread trade. And now eventually we'd love to list like Turkish lira and pesos and it'd be really funny to basically be able to say, yeah, I can borrow in a lira stable coin. And it's literally, think about it as like borrowing $1 million and repaying 400K.
Yeah.
But in real terms, right? Like your grandfather probably, I know my grandfather who's in the Navy in World War II, like tells me stories about, I bought an ice cream cone for 5 cents. It's like, yeah, that's CPI inflation, but it's also post 08 and post 2020, it's money supply and even more just debt issuance and all the above kind of happening. And so as long as there's growth that accompanies that, it's fine. But the more debt that piles up, it can get more and more scary. But I think what matters is if that debt funds growth, then everything gets sort of bailed out. And so I think that's what I got to be careful in politics here sometimes, but I think that's what the administration in the best argument is going for. I think Scott Bessent literally said, we're going to re-lever the banking system. We're going to basically increase leverage, fuel more growth, and make sure that leverage is spent well, and have this sort of golden age where we're backing the dollar with Bitcoin and we have harder assets sort of driving everything. And so that's kind of how I think about it. It's sort of the only thing that squares everybody's circles together. Yeah.
We're going to have to bring you on the podcast just as like another host that sometimes for the macro, but super excited for this finally to get launched. Where are people checking you out? Is it Votre.xyz, right?
Votre.xyz, VOTRE.xyz.
Amazing. Well, thanks for coming on.
Thanks, Avi. Yeah, pleasure.